All right, it is Monday the 5th of March. Hope everyone had a fantastic weekend, and I hope everyone had a great first day back this week in the markets. And let's take a look at the overall market. We'll look at the E-mini S&P on the daily chart. Big rally today, of course, right? So we had a big rally from this low hitting the 200-day moving average on February 9th. Rallied all the way up here to the 27th and then pulled back nicely 3 consecutive days with lower highs. 1, 2, 3 lower highs and lower lows. Nailed this mid-average, bounced up nicely, and then today we had some nice follow-through, okay, to the upside. So, and we're seeing that on not only the broad S&P market, but the small caps, the Russell 2000, same thing, YM, same thing, and then NASDAQ, a bit stronger than the other markets because we're trading closer to the highs. Now we had this double top here, so we'll see if we come back up through. But in terms of a trade setup for Tuesday, the 6th of March, I believe Weight Watchers is a good one for you to look at. We're testing, let me draw a horizontal line here, testing a pivot right here, right? A nice rejection area before, right? Market bounced beautifully from 61 all the way up to what, 77.19. Now we're trading back to that level, and if you take a look at the RSI, the 2-bar RSI, right, we are trading well below 10, right, 0.81, so we're extremely overdone. Now, of course, just being oversold isn't enough, right, but when you look at the overall trend of the market, the trend is up. And let's just go back a little further, right? Trend is substantially higher. Now let's draw Fibonacci retracement from this low, right? The low when it was made at 41.15 back in November of last year. We'll draw the Fibonacci retracements. Go Fib tool, Fib lines. We'll draw from this low up to this high. All right, so essentially, the market's trading right between the 38.2% retracement and the 50% retracement, right at this rejection low area. With the RSI below 10, leads me to believe that we're going to get a bounce here in the next day or so. So what I would do is, yeah, you could buy the 60 in the money. I would go April or May call options, looking for a bounce, to make at least 50% on that trade, 50% of the premium that you would pay for that. So if the market is able to move lower, take out Monday's low of 60.80. I'd be looking at those calls to look to get long. Again, each time you see this 2-bar RSI closing below, right, closing below 10 on the daily chart, you can see bounces each time. So let's just take a look at that real quick. Again, you're only looking to do this on stocks that are trending, right? So each time, I mean, look at this, and here. So you're talking in here, the bounces we got, right? So again, you're buying at least 2 months out. So on this one, 2 months out would have put you in here, okay? Right in here. Look at that. Nice rally. Look at that. See this? Every time it closes below, right? It closed right below, right on this bar. Okay? Look at that move. Same thing here. Right? And again here, shortly after. But again, you're doing at least a 45 to 2 months out on a call options. Okay? Big. Now, granted, on this big reversal day right here, closed right in here, right there, on that day, I believe we did in fact close below 10. Right there we did, okay? But, you know, that's a bearish outside vertical bar too. You're not going to want to be buying it. You want to see how, I mean, that's a big, huge reversal pattern. So you're going to wait a couple days to see if we can sustain that down move. Once volatility starts to normalize, which it's starting to do now because you see the ranges of the bars are starting to contract a bit. They're not as huge as they once were, right? You want to see it settle down a bit. and that's exactly what it did. The day after this huge reversal pattern, the range was about half of the reversal day, and then Friday of last week, smaller yet, and then today about the same size as Friday, closing near the low of the day, and even more oversold at a level, right? These rejection lows. So that's why I'm looking at that for tomorrow. So I'm going to be looking at that tomorrow. Let's take a look at MBUU. Remember I pointed that one out a couple days ago after that inside vertical bar, right? That was a trade setup. Look at that. So once the market took out that high of 32.68, which occurred on the 1st of March, look at where we're at today. So that's a nice little trade there. AMIT, same thing. Look at that, had an inside bar here. Brought it to your attention that if the market took out that high, look to get long. Again, once that market took off the high of 31.96 to 32.06, I mean, look at that. Rallied all the way up to 37.81. Again, buying call options, the right call options, a month and a half to 2 months out, you're talking a 50 to 100% return on these types of trades. PE, remember PE, we were looking to go short right in here because we were below the moving averages and we got extremely overbought. So buying the put options right in here, market came down nice before bouncing up big time back in your face on Monday. So I'll take that off. Let's see, Twitter back up near those highs. Look at that. So tomorrow, Tuesday, I'd look at this. If we can start penetrating up through the high of 35 even, round number of 35, if you're not already long, I'd be at least starting to put your foot in the water. Okay, again, I've been long this since, what, $16.50. I'm still long. Looking for a bigger move here. All right, and let's see, gold. I've been bullish gold since down in here. So hope that helps. Have a great one. I'll talk to you tomorrow. Bye for now.